Everyone talks about the United States as the ultimate land of opportunity, a fortress for wealth and safety. But in 2026, cracks in its reputation are impossible to ignore. Rising debt, political unrest, and global exposure are shaking the foundations of what many once considered unshakable. Meanwhile, a small European country quietly offers the stability, neutrality, and financial security that the U.S. struggles to maintain. Today, we're diving into Switzerland versus the U.S., why the U.S. isn't the safe haven it claims to be. When people talk about a safe haven country, they imagine stability, financial security, personal safety, and predictable governance. Historically, Switzerland has been synonymous with this concept. Neutral in wars, politically stable, financially robust, and culturally discreet. The United States, meanwhile, has long been seen as a global powerhouse, a land of opportunity, innovation, and freedom. But in 2026, the narrative that the U.S. is a safe haven is increasingly under scrutiny. Switzerland's reputation is anchored in centuries of political neutrality and economic prudence. Its political system, built around direct democracy and federalism, ensures local representation while protecting national stability. For instance, Swiss voters regularly have the power to shape fiscal policy directly, a feature that limits reckless government spending. Coupled with a long-standing policy of avoiding foreign entanglements, this has made Switzerland an attractive place for individuals seeking a predictable, secure environment. Financial security is another cornerstone. Swiss banks are globally known for safeguarding assets, thanks to stringent privacy laws and rigorous financial oversight. Even during the global financial crises of the past decades, Switzerland maintained relative stability. Compare this to the U.S., where the 2008 financial collapse revealed vulnerabilities in regulatory oversight and dependence on volatile markets. Today, inflation, interest rate uncertainty, and geopolitical tensions further challenge perceptions of the U.S. as an unshakable financial haven. On the societal front, Switzerland consistently ranks high in quality of life, low crime, and social cohesion. Its healthcare system, though expensive, provides universal access, and the education system is ranked among the world's best. The U.S., in contrast, struggles with rising inequality, healthcare accessibility issues, and educational disparities, which undermine the notion of universal safety. The perception of safety is also psychological. Switzerland's neutrality means that residents rarely experience external shocks from wars or international sanctions. The U.S., however, is deeply embedded in global conflicts and trade disputes, exposing its citizens to indirect economic and political consequences. Moreover, domestic instability, including political polarization and social unrest, has grown, prompting many to question whether the U.S. can maintain the same level of societal security that Switzerland enjoys. But this isn't just about comparing economic statistics or governance. It's about trust, predictability, and resilience. Can a country protect its citizens' wealth, well-being, and personal freedoms in the face of global uncertainty? By examining financial systems, social structures, and geopolitical positioning, we'll uncover why Switzerland remains a model safe haven and why the U.S., despite its strengths, faces critical vulnerabilities. Economic stability is often the first measure people use to define a safe haven. Switzerland consistently ranks among the top countries for GDP per capita, low national debt relative to GDP, and inflation control. Its economy thrives on precision industries like banking, pharmaceuticals, and high-quality manufacturing. Swiss fiscal policy emphasizes long-term stability over short-term gains. Debt levels are carefully managed, and government interventions are methodical and minimal. Contrast this with the U.S., which has historically leveraged its economic power to achieve rapid growth, often through high government spending and debt accumulation. The U.S. dollar remains the world's reserve currency, and America's financial markets are deeply integrated into global trade. While this offers enormous influence and opportunities, it also introduces systemic risk. Inflation spikes, interest rate volatility, and political disputes over debt ceilings create uncertainty for both citizens and investors.
During economic crises, Switzerland demonstrates resilience. The 2008 global financial crisis, for instance, caused Swiss banks to adjust prudently while maintaining public confidence. Meanwhile, U.S. institutions like Lehman Brothers collapsed, triggering worldwide financial panic. In 2026, growing concerns about national debt and fiscal mismanagement in the U.S. further erode confidence in its stability. Swiss monetary policy, governed by the Swiss National Bank, emphasizes long-term value retention, low inflation, and financial prudence, which contrast sharply with the U.S. Federal Reserve's approach of reactive stimulus and quantitative easing. Furthermore, Switzerland's low unemployment, robust social safety nets, and diverse industrial base act as buffers against economic shocks. The U.S., despite innovation-driven growth, faces significant disparities, wage stagnation for many, concentrated wealth at the top, and an over-reliance on consumer-driven markets. Economic volatility disproportionately affects the middle class and retirees, challenging the perception that the U.S. is a reliable safe haven for personal wealth and financial security.
Switzerland also benefits from economic neutrality. Its banks attract foreign capital, and its export-oriented industries remain resilient to geopolitical conflict. The U.S., heavily involved in global conflicts and sanctions regimes, faces exposure to trade wars, foreign policy backlash, and international market fluctuations. The bottom line, economic predictability is as much about internal governance as global positioning. In the coming sections, we'll explore how these differences extend beyond economics, affecting safety, social stability, and even personal freedoms. The question is not whether the U.S. is strong, it is, but whether it is truly resilient enough to serve as a modern, safe haven. One of the greatest differentiators between Switzerland and the U.S. lies in geopolitical positioning. Switzerland's neutrality is legendary. For centuries, it has avoided wars, limiting exposure to the devastating consequences of global conflict. This neutrality has not only preserved lives, but also economic stability, making it a magnet for global wealth. The United States, in contrast, is a global superpower, deeply enmeshed in international conflicts and alliances. While this grants strategic influence, it also exposes the country to retaliatory risks, terrorism threats, and complex trade disruptions. Citizens and investors alike can feel these impacts indirectly through economic fluctuations, rising defense spending, and shifts in global supply chains.
In the modern era, geopolitical risks extend beyond traditional warfare. Cybersecurity threats, international espionage, and foreign interference are increasingly prevalent. Switzerland, due to its neutral stance and strong internal regulation, is less likely to become a target. The U.S., with its high-profile global interventions and digital infrastructure prominence, is more exposed. For instance, cyber attacks on critical infrastructure can affect national security, financial systems, and even private citizens' data. Another key factor is energy security. Switzerland, although resource-poor, maintains highly strategic reserves and robust infrastructure planning. The U.S., while energy-rich, is entangled in complex global energy markets. Fluctuating oil prices, geopolitical sanctions, and climate-related disasters can disrupt domestic energy availability, undermining the idea of safety and predictability.
Moreover, political polarization in the U.S. creates internal vulnerabilities that can magnify geopolitical risks. A divided government may struggle to respond effectively to crises, leaving citizens and investors exposed. Switzerland, with its consensus-driven government and long tradition of coalition leadership, tends to respond swiftly and predictably to emergencies. In short, neutrality is a strategic shield,
It not only reduces direct risks of war, but also minimizes secondary shocks to the economy and society. This explains why, in times of global uncertainty, investors and high net worth individuals frequently turn to Swiss assets rather than American ones. The U.S. may offer opportunity and influence, but in terms of predictable safety, Switzerland's neutral stance provides a distinct advantage. Social stability is another pillar of a safe haven. Switzerland excels here. The country boasts low crime rates, high social trust, and a culture of civic engagement. Citizens have regular avenues to influence governance, including referendums on critical policy issues. This transparency and participation foster a sense of stability, reducing civil unrest and increasing confidence in institutions. In contrast, the U.S. faces growing social challenges. Polarization, crime in urban centers, and debates over civil liberties undermine social cohesion. While local communities may thrive, national-level tensions affect perceptions of safety. Protests, partisan conflict, and unequal access to public services contribute to societal instability, which can directly impact personal safety and economic confidence. Education and healthcare are key indicators of social stability. Switzerland provides a strong public education system and universal healthcare, ensuring broad access to essential services. The U.S., despite some world-class institutions, struggles with unequal access. Healthcare costs are high, and quality varies by location and socioeconomic status. Education funding is uneven, contributing to long-term inequality and social friction. Corruption is another differentiator. Switzerland consistently ranks among the least corrupt nations globally, reinforcing trust in government institutions. The U.S., while generally transparent, faces high-profile political scandals and lobbying pressures, which can shake confidence in governance. Moreover, Switzerland's cantonal system allows regions to self-govern in many aspects, reducing the risk of centralized failures. The U.S., with its federal system, still experiences significant friction between state and federal policies, particularly in healthcare, policing, and social programs. Ultimately, social stability is about predictability. Switzerland offers citizens a clear understanding of rights, responsibilities, and protections. In contrast, U.S. social volatility can create uncertainty, making it harder for individuals and investors to plan for the future confidently. Moreover, Switzerland's cantonal system allows regions to self-govern in many aspects, reducing the risk of centralized failures. The U.S., with its federal system, still experiences significant friction between state and federal policies, particularly in healthcare, policing, and social programs. Ultimately, social stability is about predictability. Switzerland offers citizens a clear understanding of rights, responsibilities, and protections. In contrast, U.S. social volatility can create uncertainty, making it harder for individuals and investors to plan for the future confidently. Financial security is the cornerstone of a safe haven, and here, Switzerland is unrivaled. Swiss banks are famous for asset protection, robust privacy laws, and strict regulation. Investors turn to Switzerland not merely for returns, but for stability and safety against global volatility. Swiss currency, the franc, is a trusted store of value, particularly in times of international uncertainty. The US dollar is globally dominant, but domestic policies, debt levels, and inflation threaten confidence. In 2026, rising federal debt and political disputes over spending priorities create financial uncertainty. Unlike Switzerland, where wealth preservation is a top priority, the U.S. financial environment rewards risk-taking, which can amplify losses during crises. Swiss legal frameworks also protect personal and corporate wealth. Estate laws, trust systems, and taxation are predictable and transparent. In the U.S., litigation risks, taxation complexities, and regulatory changes can erode wealth security, particularly for international investors. For citizens, Switzerland's robust social programs further protect against financial shocks. Healthcare, pensions, and unemployment benefits provide a safety net, reducing reliance on personal savings. U.S. citizens, by contrast, often bear higher individual financial risk, making the country less of a predictable safe haven. Moreover, Switzerland's banking secrecy, though moderated in recent years, still offers unparalleled privacy. The U.S., under international transparency agreements and domestic reporting rules, exposes citizens' finances more directly, which can deter those seeking secure wealth preservation. In essence, financial security isn't just about money, it's about predictability, resilience, and trust. Switzerland offers all three. The U.S. offers opportunity, but with heightened risk, challenging its image as a safe haven. By now, the picture is clear. Switzerland's reputation as a safe haven rests on centuries of political neutrality, economic prudence, social stability, and financial protection. The U.S., while powerful and influential, faces vulnerabilities in governance, societal cohesion, economic predictability, and geopolitical exposure. The key lesson is this: opportunity does not equal safety. The U.S. remains a land of innovation and growth, but these strengths come with trade-offs. High risk, social volatility, and exposure to global pressures reduce its reliability as a true safe haven. Investors, expatriates, and those seeking stability may find Switzerland's predictability far more attractive. Global crises, whether financial, political, or social, highlight these differences. In an increasingly interconnected world, resilience and predictability matter more than raw power. Switzerland embodies these traits. The U.S., despite its historical dominance, increasingly reveals structural weaknesses. The safe haven narrative is shifting. Citizens and investors must distinguish between short-term opportunity and long-term security. While the U.S. excels in growth and influence, Switzerland excels in preservation and stability. In conclusion, 2026 is a moment to rethink assumptions. Safety is not measured by size, power, or influence. It's measured by reliability, resilience, and the ability to protect citizens and wealth across generations. In this measure, Switzerland remains unmatched, while the U.S. faces significant challenges to its once unquestioned status as a safe haven. So, is the U.S. still a safe haven? The truth is more complex than history books suggest. Power, growth, and influence are impressive, but without stability, predictability, and resilience, they don't guarantee security. Switzerland offers a model of what true safety looks like: neutral, economically stable, socially cohesive, and financially protected. In a world of uncertainty, understanding these differences is crucial, not just for investors, but for anyone thinking about long-term safety and security. The choice between opportunity and security has never been clearer.